Welcome back, everyone, and Happy New Year. I hope everyone is off to a great start. In this video, I'm going to show you guys how to identify bullish and bearish moves that are driven by supply and demand compared to bullish and bearish moves that are driven by market manipulation. When you have no accountability for corruption or market manipulation, then there's no stability in the markets. And we are seeing a lot of that lately. So I want to make sure I'm helping everybody through these challenging times with the market. So there's going to be a lot that we're going to learn and relearn about how we look at demand. So what prompted me to make this video was the upcoming decision from the Supreme Court regarding Trump's tariffs. On January 14th, Wednesday, the Supreme Court is expected to make a decision whether or not Trump had the authority to expand tariffs and also issue reciprocal tariffs. And in many ways, the accountability that many of us are expecting is what the market needs in order for there to be market corrections. Right now, we're seeing gold and silver sky high and out of control because if there's no accountability, then prices will just move crazy. We'll see bullish moves when there's no demand. We'll see bearish moves when there's no supply. And it makes it very difficult to analyze the markets correctly when you don't have stability. And we need that accountability so the market can start making corrections. The only problem is it comes at a cost. Because if the markets start to make corrections, and the U.S. has to pay back hundreds of billions of dollars, if not trillions of dollars, in money that we may or may not have, then we can see some serious problems to the U.S. economy, which obviously affects many of us. So the Supreme Court is in a very tough situation, and it makes sense why they didn't make a decision on Friday, especially since we had NFP with the job numbers, and adding the Supreme Court decision on top of that would have just made everything just out of control. So we'll see on Wednesday how that affects the markets and if Trump is going to be held accountable for doing some illegal things finally. All right. So with that being said, I want to get into some basics on supply and demand, and then we'll get into the charts. And thanks again for everyone being here. If you want to reach out to me, you can respond in the comments. You can email me, but Facebook Messenger is my preferred method of contact. All right, guys, let's get into it. Okay, so before we get into supply and demand on the charts, I want to make sure everyone has a clear understanding of how demand and supply is supposed to work. So I'm going to briefly explain that. So when you have more demand than you have sellers, that means there's more buyers than sellers that are pushing the price up. As there are more buyers than sellers, the price keeps going up until the buyers stop buying. Once the buyers stop buying, that's when you have an overbought situation that creates a supply zone. And when you have a supply zone, the price drops. So when you see bullish moves where there isn't any presence of demand on the charts, that is a very good sign of manipulation. And also, when you see bearish moves without supply zones, that is a very good sign of manipulation as well. Okay, so for those of you where this is your first video of mine that you're watching, my name is Jeremy Dancer, and I am a Forex trader, Forex coach, and a Forex hedge fund manager. One of the things that separates me from most of the people that you will see on YouTube is that I am one of the few traders that has public accounts for verification. These right here are an example of the current accounts that I have, and these are all live accounts. And the reason why I use MKL5 instead of my Forex book or any of those other ones is because this right here is 100% transparent. There is no option to edit any of the data that you guys see here. So this is 100% real. I can't manipulate things. I can't say, you know what, I don't want to show any bad data. Whereas like my Forex book, you can really customize a lot of what you share to the public. I can't customize anything. And there are some drawbacks to that. For example, you can see these accounts at the bottom. They appear to be negative, but they're actually in profit. So if you click on it, you can see that the account is actually $537 in profit. I had a tough recovery to get it back in profit, but for whatever reason, the way MKL5 works in terms of their tracking, it's a complicated system. However, for people who actually click on the accounts, can usually read between the lines. And this is another example as well. It's showing that it's down 20%. But if you click on the account, you can see it's actually up $52. I think the reporting is off because I started trading this account when it had a $2,500 deposit. Now, I knew at the time that this was going to be a $10,000 account. So I wasn't really too worried about, I guess, the risk, so to speak, because I knew that this deposit was coming. Unfortunately, it messed up the report, the tracking. So it shows it's down 20% when in fact it's actually up $52. For people that are able to click on the accounts and read between the lines, are able to make sense of things. And then you can see all of my accounts here as well. If you see more about the author, but yeah, like I said, I'm one of the few people that actually shares this stuff with you. So you guys see me on my best days, you guys see me on my worst days, you guys see me in the middle, and that's just what I believe in, especially for someone who wants to give advice on how to trade Forex. I think all of us should have some measure of accountability because I don't want you to ever buy my program without knowing that, hey, you know what, this is actually legit. And you're actually learning from somebody who's actually actively doing this and successful with it. So if you want to know about Forex, I am the perfect person to come to. I will say this is a very challenging market. It's going to be tough. It's not going to be an easy, breezy process as we would all like it to be. But hopefully, the markets will start to stabilize some and we can see some smoother conditions that will make it easier for us to navigate. All right. So with that being said, we're going to dive into the charts. I'm going to be going over silver and gold, and we're going to do some real-time analysis that is specific to supply and demand. All right. Thanks for being here once again, and let's head over to the charts. Okay, so the first one we're going to look at is we're going to look at silver. And please note the difference between the time frames. So when you're looking at the 15-minute time frame, that's a good time frame for day traders, people who want to be in and out of trades the same day. If you trade off the 1 hour time frame, you're typically looking for trades you're going to stay in for maybe like 1 to 3 different days. And then if you're trading on like the 4 hour and daily time frame, you're typically looking for trades that you plan on being in for weeks at a time, and in some cases, even months. Okay. Me personally, I am a day trader. So I like being in and out of trades the same day. I really hate having to carry over trades into the next day. So that's just a little bit from where I'm coming from. All right, so we're going to look at some situations with the 15-minute time frame, and then we'll look at the 1 hour time frame as well. So to keep things simple, we're just going to use the candles for supply and demand. There's a million different indicators out there that track supply and demand. There's deltas, and you can see inside the candles, so you know how many buyers and sellers there are. But I don't want to get too deep into all of that. I just want to keep everything simple for this video. Okay. Now, when it comes to supply, that is very easy to identify. We're looking at the wick above the body of the candle. So if you look at this area right here, you can see between this line right here and this resistant line, this would be a supply zone. All right. And then the bottom of the wick is a demand zone. So from here to here would be demand. So when you see those wicks on the bottom of the candle and they're bigger than the wicks on the top of the candle, that's how you know that there is more demand than there is supply when you trade off of candles. All right. So let's just kind of look at this for a second. So in this case right here, if we're looking at these two candles, we can see we have some supply zone building, and we currently don't see any demand that meets this supply. This means the price has to drop, or it should drop anyway. So if there's no manipulation going on, then if you see a scenario like this, the price is going to most likely go down. All right. And we see the price actually went down as well. And then we had this very odd candle right here where we had a ton of demand. So this demand met this supply and basically wipes them out. So we technically should have seen the price continue upward from this candle, but instead the price just dropped. So this is where the manipulation comes in, because if you have this much demand, then the price should be going up. So if the price all of a sudden makes a huge drop, either there is a big sell-off somewhere, but we're not seeing that reflected on the charts. And this is the challenge that so many traders are having, because if you are a technical trader and you're following this, uh, you know, there's a lot of moves that just aren't making sense. Okay. Now, also keep in mind, the 15-minute time frame is a little bit more challenging compared to the 1 hour time frame. If I switch over to the 1 hour time frame, let's compare the difference. All right. Now, I have different markings already here. But the cool thing about the 1 hour time frame is it smooths out a lot of the volatility. So if you find that, you know what, this market is just way too crazy, the moves are happening way too fast, even if you are a day trader like myself, it benefits you to actually look at the 1 hour time frame, and it makes a lot more sense. Now, for those of you who use break of structure, change of character, that's actually working very well in this current market. So we see a high, we see a low, we see a lower high, we see lower lows. This is very stable in this market right here. We see a lower low, and then we start to see some higher lows and some higher highs. And then this line right here would be a change of character. It'd be a bullish change of character. And then we would start looking for buys. Um, just to explain this right here, to keep myself organized, I'm not staring at the charts 24/7. All right. I have key times of the day that I have identified where the market makes its biggest moves. And for me, that's 8 p.m., 6 a.m., 7 a.m., 9 a.m., 10 a.m., and 2:30 p.m., all in Eastern time. Now, there are other periods as well, like 1 o'clock in the morning, but I am asleep at 1 o'clock in the morning. All right. So if you want to be a professional trader and have consistency, you need to have a schedule. If you don't have a schedule, you'll drive yourself crazy. You'll be up all times of the day. And, it's very important, not just from the money aspect of it, but your overall mental and physical health and being able to have a regular schedule where you can sleep, and you can take lunch, you can have dinner, you can have breakfast, you can have hobbies. You want to have a life. So my schedule is designed to make sure that I have a life and I have balance. Okay. So what you're noticing on the 1 hour time frame is that a lot of the volatility that you saw in the 15-minute time frame has been smoothed out. So this could be an easy fix for some of you who trade off of the 1 minute and 5 minute and even 15-minute time frame. Just switch to the 1 hour time frame, and that might help a lot of you. All right. Um, and another thing that's very interesting too, I still use this indicator called inflection nexus. I think this is a very effective tool. So I'll show that here. And we can see here that this indicator is working very well. So, I mean, it gave the right sell signal here. Even this sell signal, the price pulled back a little bit. But, if you took it, you could have closed here. And the most recent signals is a sell signal. And then it gave two buy signals. So one of the changes that I'm having to be forced to make is I have to switch to the 1 hour time frame. It kills me because things move a lot slower, but thankfully, because of my key times of the day, it still works out pretty well. And even this signal I just noticed was actually pretty good. So this right here is silver. Oh yeah, I wanted to bring up this. So you see this area right here, okay, where the lower low is. Where is the demand to justify this huge green candle, right? It's one thing when we see candles like this and we see tweezer bottoms. This right here is a sign of demand. So when you see these types of situations, that's how we know, okay, there's some manipulation going on, because, maybe this drop was not justified because, we see a lot of demand that showed up on the charts, and this demand is higher than this supply right here. So this drop didn't make any sense. And then even when the price was dropping, we saw demand continue to build and the price kept going down. So this green candle could have been simply just a correction from what should have been happening all along. And then you see another candle right here. This is a very strong candle, a lot of demand, And then you had this supply try to meet this demand, and then it was only met with even more demand. And this is why we see the price continue to go up. All right. So we'll see what happens later on today when the market opens, if silver is going to make a correction. All right. And let's look at gold for a second. So the same thing. Uh, you know, as crazy as a lot of this is, Inflection Nexus is actually doing pretty good on the 1 hour time frame. But if I switch this to the 15-minute time frame, we can kind of see that there are some challenges, right? So it gave a sell signal here, and then the price shot way up, and then this sell signal worked out. So the volatility on the 15-minute time frame is extremely challenging to navigate. So one of the changes that I'm going to be making this week is trading more off of the 1 hour time frame instead of the 15-minute time frame. But you can see there's a lot of price action that is happening here. And for the most part, it is following what we're seeing here. It's just very, very volatile. And last week we did have NFP, so it does make sense that the market would move the way it did. But just trading off of the candles, I mean, this is pretty reliable and pretty stable. You saw a nice supply zone right here, and then the price dropped, and then you see some tweezer bottoms. This right here is a bullish pattern. You saw the price go up. So for the most part, it's working out pretty well. It's just very, very technical. You did see some supply zones build here, and the price should have gone down. But then this supply was quickly met with this demand, and the price went up. So if you want to avoid these types of situations, the easiest thing to do is just trade off of the 1 hour time frame. Okay. And one of the reasons why I am trading or I'm adding silver, I didn't like ever trade silver, right? But silver is starting to be like the new gold. So like in this screenshot right here, you guys can see the difference between the type of moves that gold makes and the type of moves that silver makes. The only thing that you have to be careful with silver is the pip value is very different. It's like $50 with a 0.01 lot size for every 100 pips on silver, and that's pretty massive. So even trading with small lot sizes can be very risky. But because the charts are much smoother and the price action with silver is much more stable, uh, I am starting to merge into trading silver more than I am with gold, because these moves with gold, I mean, gold is making like 1,000 pip moves every day. That's insane. Whereas silver typically moves anywhere from 300 to 500 pips in a day. So, I mean, I can live with that. What I can't live with is 1 minute gold is at 4,400, the next minute gold is at 4,500, and you're like, man, this is out of control. But with gold, the pip value is much less than silver. So you can accommodate that risk as well. Because with a 0.01 lot size, for example, um, that's $10 for every 100 pips. So even though gold makes much bigger moves, since the pip value is much less than silver, you can afford to have a much bigger stop loss in comparison to silver. So that's my recommendation when it comes to trading gold and silver and using supply and demand. So in short, when you see these situations on the chart where you have supply zones and the market, continues going up, and you're not seeing like a lot of demand that's pushing the price up, that's when you know there's some manipulation going on. All right. And it's the opposite if the price is going down. All right. With that being said, this is also creating some historic opportunities because one thing that is guaranteed in this current market is that something crazy is going to happen. I mean, we had to deal with all the tariff announcements. The market finally got to a good place with that. And then all of a sudden, we hear the president of Venezuela was captured or kidnapped. I mean, that's just insane. And then earlier today, Trump was giving announcements that the U.S. he wants the military to start, creating plans to take over Greenland. So there's all this unprecedented amount of things happening that should never be happening, and the market is reacting to it, and that creates a serious problem when it comes to identifying demand and supply. So we almost have to look at the market in a way where we are anticipating something crazy going to happen that is going to disrupt the flow of things. So if we have like 2 or 3 days or even a week where the market is stable, the chart conditions are smooth, then we should already be thinking, okay, you know what? Trump's going to do something. He's going to say something. He's going to do something, but something's going to happen. And we should be looking for those situations where, okay, you know what? I know the charts is saying to sell, but I'm going to look for areas to buy because something chaotic is going to happen. And that's a major change from how I used to look at this market. I never had to look at the market in this way where I had to look at or expect something chaotic to happen that was going to disrupt everything, and then there wouldn't be a correction to follow. Because normally in the market, when something crazy happens, the market goes crazy and then you see a correction. But in this case, the markets don't have to make corrections because if there's no accountability for any corruption that's going on, then the markets can just do whatever they want, and it is what it is. So I'm a technical trader. I trade off the charts. I really don't follow news so much because news can just be whatever, and you'll drive yourself crazy trying to listen to what everyone is saying. So for those reasons, I trust what I see, for better or worse, and that creates some challenges sometimes because I mean, Inflection Nexus saw a great sell opportunity right here, but this goes back to what I was saying. Where was the demand to justify the price shooting all the way back up? We see a supply zone right here, but we don't see a demand zone. So this entire move should have a correction, but it's hard to tell if that will happen when the market opens. All right. I hope you guys got something from this. I will see you guys in the next video. Like and subscribe if you like the video, and take care, everybody.